Welcome to Taking Stock, our weekly wrap of the market action this week. I'm Vaishali Jain. The Sensex fell on Monday, June 8th, the most it had in a month, as investors judged gains to be excessive as compared to earnings. Stocks on the index were trading at 16 times earnings versus 8.8 times on March 11th, this year's low. Infrastructure, real estate, and metal companies led the decline. The index rose to a 10-month high on Tuesday after Prime Minister Manmohan Singh said the Indian economy could grow at 9% despite the global recession. Larsen & Toubro and Jay Prakash Associates climbed after the Prime Minister spoke of potential infrastructure advances. Fraud hit Satyam Computers surged to a daily limit after it reported a 160 crore rupee profit for the quarter ended December 31st. Stock prices rose again on Wednesday on expectations that the government will increase public spending, improving the economy. The Sensex has increased 60% this year, Asia's biggest advance. The sensitive index fell on Thursday on speculation that the 32% gains made over the last month made stocks too expensive. After swings throughout the day, stocks ended mixed. The Sensex was trading at 18 times estimated earnings. The index fell for a second day on Friday on profit booking, led by State Bank of India, Bharti Airtel, and Ranbaxy. The Sensex advanced 0.9% this week, its 14th weekly rise. Top gainers included Reliance, Sterlite Industries, ONGC, and Tata Steel. Top losers were Ranbaxy Labs, DLF, Reliance Communications, Mahindra & Mahindra, and Tata Motors. Many sector indices remained under pressure. Metals and oil and gas led the gains, while realty, auto, and capital goods led the decline, among other indices. Mint's market columnist, Mobis Philippos, joins us today to tell us more about what to expect from the markets. So, Mobis, stock valuations are about double what they were just 3 months ago. So do you think the rise is justified, and can we still find value in the market?
Much has changed in the past few months. Late last year, the government started, infusing liquidity, and it had some stimulus packages, and the effect of that started getting reflected in the past few months. We saw auto sales pick up, and then industry activity picked up, cement sales, steel sales. Today we saw IIP back in positive territory. The purchasing managers index of ABN AMRO has gone above 50, which is reflects an expansion. So things have turned positive. There's a lot because the liquidity increase, financing for corporates has been easier, and some of the companies which had fallen the most were companies which were highly leveraged, had a lot of debt, and they were finding it difficult to refinance it. So on that front, things are much better, many of them.
So have fundamentals changed that much to justify the rise?
Broadly, I would say fundamentals have improved, there's no doubt about it. But there is a case where valuations would have gone ahead of, how much fundamentals have improved. So some people justify it saying that, the Indian market now deserves a premium, because it's one of the few markets where growth is still high. It's one of the few markets which is not as affected by what happens in the global economy. It's insulated to a large extent, so the market should be rewarded with higher valuation multiples. So they do advocate that valuations are fine. There's one view, but some company-specific valuations certainly have gone beyond what fundamentally they should deserve.
Okay, thanks for joining us. And that's all we have for you. Thanks for watching.